Good afternoon everyone, this is Abid Khan and you are watching Karachians Academy YouTube channel. So lastly we were doing CIEAS level accounting paper 9706 and we did March attempt. So today we will start May-June attempt AS level accounting 9706, right? Then let's move on. This is paper 9706, paper 2 and version 2, May-June attempt. Total marks, total time you have is 1 hour and 30 minutes and total questions are 4 and total marks you have 90, right? So you have to plan your timings, you have to do exercises and do more practices to manage your time. So first move on and see what question number 1 says. Okay, so this is question number 1 and this question is on partnership, right? Karen and Lee are in partnership sharing profit and losses. Very carefully read the question, right, and see what it requires very carefully, right? Karen and Lee are in partnership sharing profits and losses in the ratio of 2:3. Always mark key point, right? The following balances were available at 31st of February. So their year ends on 28th of February, means it is March to February their financial year. Trial balance given on this date is, so there are administrative and interest charges, bank overdraft, capital Karen D, and carriage inward, and current assets and current account Karen and D, and then okay, see very carefully questions. Insurance is given inventory 1st of March. Okay, this is your opening inventory, right? Opening inventory is given at 8,250, right? Loan from Lee. So one of the partner has given loan to the partnership, right? This is 10,000. Non-current asset at cost and provision, okay. Provision for depreciation is given, okay. Then provision for doubtful debt, okay. Purchases, returns, and returns he has given you both debit and credit, means one is your sales return and this is your purchase return, right? Okay, then revenue, trade payables, trade receivables, suspense account. Okay, move on. So the following information is also available. They have given you some more details. Okay, but what is their requirement? See, the requirement is prepare the income statement for the year ended 28th of February, right? Use the space provided to the next page for your working, Karen and Lee. Actually, what you have to do, you have to solve your questions here, right, in paper. So, and do try to do practice, because you have to produce your answer here on this blank site, right? But I will not be doing it here. I'll be solving the questions because all the information is given above, but you don't have to do what I am doing. So you have to solve your question on the blank paper given. So then, okay, what we have to make, we have to prepare income statement, right? No issue. So let's come very carefully. So the data we already have seen. So this data given, we already have seen this. So we will move on and see. Okay, we will see the following information is also available. Okay, very carefully read, and we will make the working notes here, and then those working notes will help us in preparing our all important the requirement, the income statement. On 28th of Feb 2022, inventory had been valued at cost. This is your ending inventory. Cost 21,200. Okay, because 28th of Feb 2022. The figure included some damaged goods. Okay, very much fine. So keep in mind IAS2, right? So here we will apply IAS2 of account inventory accounting, which had cost 132. The cost of the damaged goods was the actual price was 1320 and had a sales value of 280. Okay, they are saying if you sell this damaged stock, it can be sold in 2480, but you have to do some rework on it. So damaged items could be repaired at cost of 1300. Here the NRV concepts, NRV. Please recall what you studied in inventory chapter, right? So we can do one working here, working number 1. So the opening inventory given, sorry, not opening, it is closing inventory. So closing inventory given is 21,220, right? So this much goods have been there, they are damaged goods. So you, because you have to deduct them from the inventory, they are included, so you deduct them, damaged goods, right? And what he is telling you that this damaged goods, you have to put some cost of 1300, then it will be sold in 2480. So your NRV, if you calculate, and what the NRV is, net realizable value. So net realizable value 2480 is the a sales value, and you have to less 1300, which is required to bring the product into saleable condition, this cost. So that will be deducted. So how much it comes? Just 1 minute. Let me open up the calculator, right? So 2480 minus 1300, your NRV is 1180, right? And your cost is 1320, right? So we know actually when we calculating the ending inventory, we have to calculate it on cost or NRV, whichever is lower. So you have to, so your NRV is 1180, right? And your cost is, so you have to take the lesser value. So closing inventory, sorry, not damage inventory, not closing. We will not be asked. This is not, is a NRV of this damage. It's cost or market, whichever is lower. So cost or NRV, whichever is lower. So NRV is lower than 1180. We will deduct from the ending inventory. We will deduct the damaged stock, and we will take it on cost or NRV, whichever is lower. So now this will be your corrected ending inventory. This is your corrected closing inventory. How much it comes to? Just calculate 21,220 and then minus 1320 and then plus 1180. So it comes to 21,080. So your closing inventory is 21,800 and 21,080, right? Now, so we have done with the working note for this item. In 1st January 2022, an error had been made recording returns inwards of 410. Okay, this amount had been credited to returns outward. Okay, so what they actually they when returns inward, this is sales return. When sales return is there, sales return is debited, right, and the customer account is credited. Actually they wrongly recorded this sales return 410 as a purchase return, right? So you have to deduct this amount 410 from the purchase return. So what we have to 410 to deduct from purchase return, because this is wrongly recorded, and we have to add 410 in sales return, right? So we have to do these all. I am marking that we will consider these all numbers while calculating the while preparing our income statement. Insurance includes 1410 paid for 3 months ending 30th April 2022. Okay, just remember one thing. So the above he has given you the insurance amount. Insurance amount, how much the insurance amount is, I mean, at cost, okay, administrative expenses, carriage, and this insurance. This is insurance, right? So we need to make some correction here. Insurance is given, insurance is given 7740. So what he's saying, in this 7740, an amount of 1420, the includes insurance includes for 1410, and the and this is basically prepaid. Yes, yes, this was paid for 3 months ending 30th of April. So this is paid till 30th of April, and this is for 3 months, right? And we are standing on 28th of February. So 30th of April means April, March, and Feb. So actually this 1410 was paid for February, March, and April. So February has passed, so this is your expense. But 2 months, March and April, they are not your expense. So that will be your prepaid insurance. You have to calculate the prepaid insurance, and that will be 1410. This is for 3 months. 3 months. You have to calculate it for 2 months. So 1410 minus, sorry, divided by 3, multiply by 2, so 940, right? 940 insurance paid, 940. So this is your prepaid insurance. What you have to do while preparing your is income, you have to consider, and you have to deduct 940 from this insurance, because 940 is the prepaid one, the rest is expense. So okay, we have done with this. Now move on. Okay, the loan from Lee had been arranged on 1st of November 2021. So how much we have taken in this partnership? Lee has given 10,000 of loan, right? And what was the arrangement? It was, he extended this loan to partnership business at 6% per annum. So how much would be interest? 10,000, and then 6% would be 600. So 600 is your full year interest, right? So divided by 12, and so it was extended on 1st of November, right? It was extended on, so how much months have passed? November, December, January, and February. 4 months. So it means the 4 months interest is due, right? And this we have to give to to Lee, right? And the loan, interest on loan, this is not an appropriation, this is business expenditure, right? Remember one thing, because if the partnership has taken this loan from Lee, if the partnership would not have taken this loan from Lee, then they have to arrange it from bank, so they have to pay interest to the bank, right? So it is a normal taking loan for business purpose is a normal business operation. So and the expenses paid on it, cost paid on it, is basically what the cost we are paying on it is a business expenditure. So this is business expenditure, this is not an appropriation. Keep in mind, right? So how much this will be? So 600 divided by 12 and then multiply by 4, so this is 200. 200 is interest expense, right? This we have to consider when we will be making our, this we will be considered, this we will consider, right? So this interest, and what will be the entry for this interest? This interest will be given to Lee, and what we will be making the entry? So this interest expense, you are not supposed to make the entry, but I am just making your concept clear. So interest expense, this is a business expense, 200 will be debited and 200 you will credit to current account, the current account, okay? So this will be credited to his Lee account, Lee current account, okay? The provision for doubtful debt should be increased to 310. How much it is? Provision for doubtful debt is 260, right? So they are saying this should be increased to, this should be increased to 260. So 310, you have to increase this to 310. Already you have 260 is there, so balance how much would be? The balance would be 50. So 50 would be your bad debt expense. The 50 you will charge to your profit and loss, right? And you are not supposed to make the entry, but I am just to make your concept clear. So either you can say this will affect in bad debt expense or your PNL or your income statement, whatever. 50 and 50 you will credit allowance for doubtful debts, right? So we will consider this while making in our income statement, right? So last one, the non-current assets are to be depreciated 20% per annum using the reducing balance method, okay? 20% interest, and method is reducing balance, okay? So no problem, we can move on, and we can see 160 is the cost and 56,000 is the accumulated depreciation. So this is very simple. So you will calculate depreciation. You can say note number 1, working number 2, working number 3, and working number 4, and working number 5. You can mark them, but you don't have to write it here on your paper. You all have to do all this working on your the attached sheet is given to you, will be given to you, okay? So depreciation expense would be how much? 160,000 is the total cost minus 56,000. So your reduced value or written down value would come if you deduct 160 minus then 104,000, and on this you will calculate 20% depreciation. So 20% depreciation would be 104,000 into and 0.2, right? So this is 20,800. So we have done with all our workings, right? So we simply have to make the profit and loss account. So I am trying to make this account here, and we will try to finish this because very shortly, right? So I'll be making this account here actually, but you have to make on right. So this will be Karen and Lee income statement for the year ending 28th of Feb 2022, right? So how much is sales? So this is question number 1a, right? How much is sales? Let's see how much is sales. Sales is given, okay, 229250, right? Sales is 229250. Then you have to deduct sales return, or whatever you say returns, sales returns. How much they gave you? Sales return, this is sales, and sales return is given, just revenue says 2200, okay, 2200. Sales returns are 2200, but one of the sales return wrongly debited to, you see, so we have to make this adjustment. This one, this one, 410, yeah, we have to make this adjustment. Deduct from purchase return, so purchase returns, and add in sales return. So 410 you have to, 410 you have to add here. So this will be how much? So 2200 plus 410, so 2610. This is total your sales return. So net sales would be 2610, 229 and 250, 226 and 226 and 640. Then you deduct cost of sales. So opening inventory, how much of opening inventory is given? Opening inventory given is 8250. Opening inventory 8250. I'll write it here, 8250. Then we have to add purchases. How much are purchases? Just see. So purchases 151 and 440, 151 440, and then you have to deduct purchase return. How much purchase returns are there? Purchase returns are 39. We have done with this. We have 3930. Purchase returns 3930. But we have wrongly deduct added 410 here, so we will deduct this 410. So 3000 and 3930 minus 410. So your returns are 3520. And then you see if any carriage is okay. Carriage inward, you paid this on purchases 3880. Carriage in you have to add, and then calculate how much is 151 440, then plus 3880, then minus 3520, 151 and 800, 151 800. This is your purchase, right? So this is your purchase plus 8250 is opening inventory, then 160 and 050. These are the goods available for sales. Goods available for sales, right? Okay, fine. Move on. So now then you deduct from goods available, you have to deduct the closing inventory. Closing inventory, you have calculated closing inventory here, and your closing inventory was 21080. Note working 1, right? 21080. Your closing inventory, so your cost of sales is coming as 160050, and then minus 21080. So 138,970, 138,970. This is your cost of sales. This you will deduct from net sales. Net sales is 226, then minus 226 640. So 87,670, 87,670. This is your gross profit. Okay, you have worked out the gross profit. Now what you have to do, you simply have to deduct operating expenses, OPEX, right? So start from beginning. Administrative expenses 6020. Just 1 minute, right? Admin expenses are 6020. We have done with this, right? And then bank interest. Remember one thing, bank interest is something different, which is which you pay to your bank. That is also an interest, but that is paid to bank. But on the other side, the interest on loan to the partner, that is something else. So that is interest on loan. So both are interest, but they will be treated as differently. So 180. So we have done with this, right? And after that, so capital carriage inward, we have done with carriage inward. So current account, okay, leave it. So these expenses we already have taken, okay. Then inventory, insurance. So we have to take insurance. How much insurance would be? 779 7740 minus 940. your insurance expense will be 6,800. Insurance expense, right? We are done with this. Fine. We have done with all. Provision for doubtful debt. Okay, we have to take and it was 50. We have already worked this out. Bad debt expense in below note, we already have worked this out. Here we have worked this out, done. And then you have to deduct depreciation. And also one thing which is okay, you have paid 200 interest to the partner, right? 200 interest on loan, 200, and depreciation expense, you have calculated this to 20,800, right? If you uh, add all these 6020, I'm sorry, 6020 plus 180 plus 6,800 plus 50, and then plus 200, and then plus 20,800. Okay, 34,050. These are your expenses. So if you deduct 34 from 87,670, which is your gross profit, so your net profit would come to 53,620. Okay guys, so we have done with the part A. So in our next video we will do the rest of the part of question A, and the rest of the questions. So see you in next video.